Today I will be breaking down some price action on euro dollar. I was going through my journal and I thought this would be a lovely bit of price action to show you guys how important it is to follow your edge, and after you take a loss, not be so quick to stop trading for the day or maybe revenge trade, for example, and how it's really important to wait for your edge to represent itself, to not necessarily make back the loss, but to, take another trade that does fit your plan to mitigate the loss you've just taken and make some more profit in doing so. Now, before we get into the video, just let you guys know I've got a completely free Discord. You guys can join. I share all the trades that I'm taking in here, me and my buddy. We did have a lovely sell on GU today. And I also share all of my outlooks on all the pairs that I'm watching, which is just three pairs: euro dollar, pound dollar, and Kiwi dollar. It's totally free. The link will be in the description, so make sure you check that out and drop me a message once you get in there. So the simplicity of my strategy is what allows me to excel in the markets, I will say. The majority of the time I spend mainly on the 15-minute time frame. I've built the whole of my strategy on the 15-minute time frame, so it just adds to that whole simpleness of my edge. And my data that I've got on this strategy is a considerable amount, as you can see here. I've been journaling all of my trades for the past 2 years. There's over 619 trades that I've taken. Average strike rate combined 63%, and you can see my individual pair strike rate, as well as some of my win streaks, loss streaks, Monday strike rate, and so on. So I've vigorously tested and journaled and forward tested my strategy, so I know what I'm talking about in this regard. So as you can see, I've got the London kill zone marked here and the New York kill zone marked here. This isn't an indicator, I just have some templates saved. And coming into London kill zone, you would potentially be looking at shorts. Why would you be looking at shorts? Because, right, we've taken buy side liquidity here. We've taken buy side liquidity here. And we have broken structure to the downside on the 15-minute time frame. So initially, when I'm coming into the markets and Frankfurt opens here, so this is the start of my first trading session for the day. London kill zone between 2 a.m. and 5 a.m. in the morning, New York local time. And I would draw on my range, and I want to make sure that I'm always trading from the higher or lower 30%, higher 30% if I'm selling and lower 30% if I'm buying. And I want to make sure that I have buy side liquidity to take into my entry. So we have an inside bar here, which would class as, I would personally class as buy side liquidity. I've tested this vigorously and it works very well. And we also have this level here as well as potential buy side liquidity to take. So we also have some order blocks to look at. We've got this buy to sell candle here, which I'll mark down as my point of interest. So coming into London, well, let's say the end of London session, we get this nice, lovely rejection candlestick here on the 15-minute time frame. You might be able to catch that as it's wicking out and just cover that order block high with a 5.5 pip stop. And you'd be aiming, or I'd be aiming for a 5R, which in this instance is the low. And I would take a loss. Now, this is absolutely fine. I'm not worried at all. This trade fits my plan 100%. It's what I would class as my A+ setup, and I take this trade time and time and time again. Just for reference, you can see this is located in the top 30% of the range. So this trade setup is one of my high probability setups. I would take a loss for the day, and I wouldn't stress. And then I would notice that we've now taken this high. So we've given another breakout here, and I would simply wait for the New York session to see if we come back lower to get another entry. Now, if this happened, say London kill zone was here, for example, I'll just move this over, ignore this for a minute. Say London kill zone was here. I know it's not, but just imagine it is. And you took a loss right on the open. That's fine. I would stay around for the remainder of the session, or maybe another hour or two, to see if I get another entry that does fit my plan. However, because this came, so late in the session, it makes more sense. I personally stopped trading at 5 a.m. New York local time and then wait for the New York session kill zone, as this is what I've tested and it works best for me and I have the best strike rate in doing so. So I would personally wait for the New York kill zone in this instance. So now you can see that we've broken out to the top here. And if we draw on our range again, we want to be trading from this lower portion, the lower 30% of the range. And we need some buy side, sell side liquidity this time to take into the range. So we have this inside bar as a point of liquidity. You see, we have high. So if we have a high, this automatically denotes this inside bar as a low. High, low, we take the high, high. So this denotes as a swing low because it's an inside bar. If it was not an inside bar, if this wick came down a little lower, I would not denote it as a low, or if this wick came up a little higher, it has to be an inside bar, right? Or a visible swing point, something like this. You see, here, this is a very visible swing point, right? But this inside bar also counts as a point of liquidity in the range for me. So we've got our sell side, and now we're looking at this lower 30%, and we've got this very clear as day bullish order block in the lower 30% of the range. And to make it even better, it's the extreme. So, and basically the only order block in this leg. So this makes it really, really easy. We also drop a lovely set of equal lows here to give us some sell side liquidity to take actually into our order block, which is great. We have early buyers that have been stopped out of the market via run on liquidity, breakout traders that will be trying to, get short if this is taken out. And ultimately, we're not looking for that. We've taken a loss in London. Our bias has switched because the market has seemed to have switched hands. And we're going to now look for an entry. So we're waiting for New York kill zone to open, which opens here. And we're waiting for our order block to be tapped into and mitigated and to give us a favorable reaction out of. And you see this, we have a large selling candle into this order block with a nice rejection wick. I would be more than happy to take a buy here with a reasonably sized pip stop loss. Something around about this would be okay. I maybe would cover the low, but probably not, just due to it being kill zone timing. We also hit this inside bar and we hit the EQ of the body of this candle. And obviously we know that most of the volume are located in the EQ. We practically hit the EQ here. So I would be happy to just cover the low of these candle bodies, which would be good enough for me, which would give us, if you want in this instance, you're more than happy to also cover the low or just cover that rejection candle low, but this is only a 3.7 pip stop loss, 3.5 pip stop loss. It's a little bit tight for my liking, so I would probably give it like 6.5. And then I'm just looking to target 5R out of the market, which, as you can see, we don't get it in this session. Or do we? No, we actually get it the following day. We hit 5R there, with also another scaling opportunity that you could take here to just stack another position for another 30 odd pips. So as you can see, very, very simple. And it's imperative that you do stick to your edge and you're not disheartened when you take a loss, because let's say you took -1 here, just as an example, and you then go about your day, you're thinking, oh no, I'm a shit trader, I took a loss, da 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 da. Whereas if you just waited a couple of hours, you could come back in the New York session, still stick to a trade that follows your plan and make your loss back and then some, and you'd end the day net 4R. So that's it from me. I hope that video makes sense. If it doesn't, then let me know in the comments what you would like me to explain further. Other than that, peace and love and happy trading.